Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours. We saw UK equity markets continue to march ahead, hitting their all-time highs. FTSE 100 nearly touched 8,000 level yesterday. This morning, though it has started on a weaker footing a bit. If we focus on the US equity markets were down and the sentiment was soured by lackluster earnings from the likes of PayPal. We also saw some big tech names also getting hammered by some likes of Google was hit hard yesterday as bond yields continue to rise. If we focus on oil market, we saw oil market continues to soften. The second back-to-back trading session losses yesterday on expectation that US economy may not be able to withstand the tightness which has gone over the past 12 to 18 months in the market. If focus on the bond market, as I said earlier, bond markets were a little bit soft yesterday. We saw US benchmark yields continue to rise on somewhat softer auctions data on 30-year bond auctions, which was a little bit on the lower appetite from investors overall. If you focus on the UK gilts market, gilts yield came in a little bit and by around 2 to 3 basis points depending on which part of the UK market we look at. If you focus on dollar, the currencies market, dollar continued to lose a little bit of momentum versus its major pairs like pound or euro or yen. So overall, some weakness in dollar and some weakness in markets in general. But that was yesterday. If you focus on today, this morning we got a big number for UK market. UK economy avoided a recession, contrary to expectations, where markets were expecting a contraction in Q4. We saw a flatline number in Q4 in the UK. That means UK has avoided a technical recession in the back end of last year. This is despite December number. December numbers were the activity was weak, largely because of this number of strikes we saw. We saw train strikes. We saw strikes in healthcare. We also saw strikes in Royal Mail, which also dampened overall activity in December. But there were some bright spots in December as well. We saw a number from industrial production rose surprisingly by 0.3%. Markets were expecting for contraction in the month as expected in November. So there was a big positive surprise on the industrial production side. We also saw business sentiment. Business investment rose by almost 4.8% in Q4, which was a positive development. This is on despite we saw almost a contraction of 2.5% of business investment in the prior quarter, which is from July to September. What does this mean for economy going into 2023? We expect that this positive momentum will continue as we move along this year. Also, as we have seen the energy prices been coming down, that should also boost overall economic activity. As always, we will keep you posted on how those developments come. But thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.